Good afternoon from the floor of the CB. This is Chris Robinson with your Traders Exclusive comment for today, Wednesday, the 13th day of June. Well, beware the Ides of June if you're trading soybeans. We had a USDA report just yesterday, and talk about a complete disconnect from fundamentals and then what we had following with price discovery. Long story short, the USDA lowered carryouts for soybeans. A lot of fundamental traders, in other words, people that look at supply and demand and think that that's going to move the markets, people thought that we should have been 20 or 30 cents higher. We did have an early bid, but then yesterday we started leaking, and that's one thing I wanted to talk about. When a market gets good news and cannot rally, it's telling you there's something out there that nobody sees yet or nobody knows about yet, and lo and behold, in the last 12 to 18 hours, we just had a complete meltdown. Pull up a chart of July beans or of November soybeans. A failure technically in July beans. A lot of people had 1050 as a support and 950 as a support in July soybeans. That failed. November soybeans, in the last 12 trading days, we went from a contract high of 1060 and a half, and we've broken $1.05 as I was walking over here. So in 12 days on one contract, now granted nobody sells the high and then buys the low, but that's $5,000 on one contract. One contract covers 5,000 bushels. If you are a producer and if you're going to grow 100,000 bushels of soybeans this year, you just lost $1 on paper. So that's something that from a producer standpoint, this is exactly why you have to hedge when the prices get to where they're profitable for you. You need to get your risk on paper. And again, this is going to be probably a textbook lesson of why, regardless of what the USDA says, USDA came out and said, the supply demand, we should probably have higher prices, right? And then the market says, oh yeah, well, I'll show you what I think of your fundamental news. So I can't stress that enough. We had some other action in corn and wheat as well. At this point, what are we looking at for the rest of the summer? It's going to take a weather event. In other words, it's going to take a drought or a flood to really damage yields on soybeans and get prices higher. The one weather story that has held up so far worldwide has been dryness in Russia, France, Australia. And what has that done? Well, that's kept a bid in our wheat market, both our Kansas City wheat and Chicago wheat. So it's holding in there despite the pressure from the soybean selling off. So I would look at that market. That's the one sign of strength we have. And if you are playing the weather market, we might not get a weather event here in the US, but if we get a weather event in Russia or in Australia and it damages the yields over there, that will be supportive for wheat. So what are people doing? They're putting that spread on. They may be buying wheat and selling soybeans. So take a look at that. When you get big moves like this, they represent opportunity. They also represent risk if you did nothing to protect yourself. If you want to talk about your hedging or you're speculating, please look me up online, Chris Robinson, The Robinson Review. Have a great day.